Alright, what's up everyone? So in this video, I think I would like to cover the accumulation spots for the market. There is quite a nice run-up that we are having early on in the year, which is pretty surprising. That I would say it's a good thing for everyone who has been diligently accumulating during various periods of time, especially those who got in, at the 2018 period, pre-November. That's when the Bitcoin dropped from 6K. To 3K, and then 3K to there was a long nice period of during the Christmas period in 2019, where November to December we had that very long consolidation. From there we started to move up in the March to April period. That's when the market started to go up. So now we are having this very unlikely pattern, right? Every year seems to be very different. I personally was not expecting us to move until March or April, because I think usually Q2 would always be a little bit more exciting. People are still coming back from the holidays or still in that holiday mood from the Christmas come New Year's Eve. Then after that there's the Chinese New Year, which is gonna be happening at the end of the month in January. So I was actually caught off guard. But I mean, like I said, I've always been someone who has been accumulating through the many years that I've been in crypto. Naturally, it's always good to relook at the levels. And today, I will just give a very simple analysis from where I feel the most comfortable. So if you're able to see the screen right now, I'm now looking at accumulating only if Bitcoin, or at least only if cryptocurrencies are around this period. So Bitcoin's chart is just the most straightforward, right? Whenever there's a sharp rise, you will have your altcoins taking a back seat. But if there's a consolidation in the Bitcoin price, you tend to see altcoins start to move. But during the move in January, you had the whole market actually enjoying this uptick. So there's no reason why. It's just that, as long as you have a position, you are going to be in a happy spot. So I think no matter what, I don't like to chase, especially when markets are going this crazy and rising parabolic, going parabolic. At the moment, I would say that, okay, we're just coming back to a safe zone, or at least you want to see the Bitcoin price hold a certain spot price. You don't want it to keep going upwards and then after it crashes pretty dramatically. So right now, what you're looking at is the 1 week chart, right? I think the 1 week charts give you a better perspective rather than looking at 4 hourly, 1 day, so on and so forth. And as I go along, I realize looking at the 1 week just gives me better perspective. So I hope that when you look at this chart, you are able to kind of find your spot. Because if you look at daily, or you look at 4 hours, anything too short a time frame, right, it's very challenging for you to make a decision. Sure, there are folks that enjoy that process of going in and out, and obviously crypto allows you to do that. But I feel that the best ROI, as in if you talk about long term, is just to look at the price points, and you diligently have to stick to the entry. Because if you decide to go in, it's like I said, it's very hard to tell whether 10k is too high or 10k is too low if you look at a longer term time frame, because at some point the market will decide to do a breakout. The question is, are you patient enough to wait for that breakout? So right now, my personal take is that we will be in a pretty steady this is my personal opinion, right? I may be right, I may be wrong. Like I said, this is not about financial advice, it's just my opinion on the market. So right now, I just feel that we are going to we just formed a lower low. Okay, we formed the lower low back in August. Okay, so that's kind of like it's not necessarily bad. It's just that there's not enough volume as much as we like, but we can see a consolidation of where the money is going. So right now you see majority of the money in the top top 15, top 20, top 50 coins, rather than it being diversified into the small market cap coins. Now, the small market cap coins have also benefited from this recent uptick. So it's kind of like a whole trying to kickstart the bull run, right? But why would you kickstart the bull run this early in the year, right? I mean, look, there are various thoughts into it, and I don't think we should speculate. Like, for example, people are thinking that, the US China trade wars it has kind of come to a conclusion, and in a way there will be a bit of progression towards a more bullish sentiment coming 2020, right? So the stock markets have benefited from this, and it seems to be chugging along. So does that mean that it's kind of safe to come out and play? Maybe. So that's why, in a way, we had this consolidation period, but instead of having a breakout, we in fact had a pretty drastic breakdown, right? Now it seems to be breaking out from this triangle. So assuming, right, that we cross the 200-day, if the 50-day crosses the 200-day moving average, it's pretty much bullish from there, because you had the market had 200 days to decide what it wanted to do. So as of now, we have not really crossed in the clean or in the green yet to safely say that. So if you kind of do the 200-day moving average on this particular chart for Bitcoin, you will realize it has not crossed that. Now, for a longer term play, I would say the price point, like I said, what's the rationale of people really buying $8,600 BTC, right? $8,600 BTC, even though it's fractionalized, even though you can own fractions of Bitcoin, you tend to kind of like, it's still, I still can't even own a full Bitcoin, right? And how many people can really say that they can own a full Bitcoin at the current price? So that's really minimizing the target market, right? So when you kind of minimize and you kind of look at it from a different kind of standpoint, you realize, okay, you're pricing out quite a lot of people. That kind of forces the retail folks, okay? And the retail folks actually play a big part as well into the influx of money that could potentially come in. So what's really left? If I can't really own a full Bitcoin, now you gotta kind of listen to the whole story. No matter what, nobody likes to own a fraction. Nobody wants to own a fraction of a car. Nobody really wants to own a fraction of a house. Everybody wants to own the whole house, or they don't own it at all. Okay, it's just the way the world works. And if it's like you're telling me like you want to share your girlfriend, you want to own a fraction of it. It doesn't work. As a person, right? You always want to own as many as possible. Now, obviously, you don't want to have too many girlfriends. Well, it depends, right? Some people, kind of like that. But anyway, long story short, you want to own the whole thing. So that kind of leaves us to a few top contenders. Now, everybody wants to know, who are the top contenders, Ryan, that you're talking about? Obviously, now you're talking about potential altcoins. Now, the few cryptocurrencies that I personally am looking at, okay, at this point of time, in no particular order, okay, is just basically stuff that I've been accumulating for the past 2 years, okay. So, for example, EOS was one of my very long-term picks. Of course, EOS didn't do so well in the particular year of 2019, right? In 2019, it had a nice run up, just like most cryptocurrencies. If you see this chart, you kind of know what I'm talking about. Every single top 10, top 50, top 20 altcoin kind of benefited from the rise up of Bitcoin. But when EOS had a consolidation of the network, okay, the price tanked rather drastically, and now EOS is making a second attempt at a social media platform. So this is, I wouldn't say it's a shield, because I feel that at the end of the day, there is always that nice pitch. So this is a speculative play still. Why is it a speculative play? Because the social media platform functioning on a blockchain, right? Sometimes when you say that you want to take on Facebook, for the fact that Facebook has been around that long and they own a lot of companies, it's like you tell me you want to take on Volkswagen, okay? You're a new company and you want to take on Volkswagen. Sure, it's great to have big dreams and yeah, you raised a lot of money during the time, but it doesn't mean that it makes you great. So there are gonna be a lot of potential challenges that a lot of people cannot foresee. So in the month of February, so-called February the 14th, Voice will be launched. Now, whether or not it's going to benefit the token or not, nobody knows, because no one knows the incentive model behind it. Sure, you're going to incentivize people for doing certain things on the platform. Pretty cliche if you think about it. And of course, the person, the CTO, is Dan Larimer, right? Dan Larimer was also the co-founder cum creator of Steemit. But at the time, when Steem tokens were $1 to even $2, sure, it feels great to start earning Steem tokens because, you know, it's $1, right? The more upvotes I got for a certain post or certain content, I feel actually pretty well rewarded, right? And there was very low to no censorship based on what I understood. Whereas if you're on YouTube, right, you can't be as open about the topics that you discuss. So who knows how Voice is going to be created, whether it's going to provide that that kind of freedom of content creation and different genres, and how are they going to kind of limit the kind of stuff that is being shared, protecting data and all that kind of stuff. That remains to be heard. But as you can see, EOS has been doing pretty well ever since the lows, which was around the $2.15 to $2.20. Currently now it's up pretty much it's pretty much up 40%, so it's not too bad. Now the other speculative plays that will be happening throughout the year are, for example, ADA, right? ADA unfortunately has a slight delay in the network where you have Shelly and the Ouroboros wallet, right? So ADA is one of those smart contract platform plays. I think there are a lot of the existing smart contract platforms, right, have not really been doing very well. If you think about it, if you don't have a high staking reward, okay, which unfortunately ADA doesn't have, EOS doesn't have, you're talking about less than 5%. So people who have been trying to accumulate more tokens are more inclined to move towards the high percentages. So we're talking about 7% per annum and above. So you kind of get that accumulation as you stake. But I've always wondered, if you're getting these airdrops come staking rewards, doesn't that actually provide and put out more circulating tokens? So if you are having a more controlled, so there's capped and uncapped, right? The uncapped ones are the ones that really kind of make me a little bit worried, because uncapped means that there will be a continued supply of tokens of that particular, there will be a supply of continuous tokens in the there will be a continuous supply of tokens, okay, just continuously coming out into the market. Whereas when you look at Bitcoin, right, the reward keeps shrinking, right? The reward gets lesser and lesser. But yes, there is still going to be tokens coming out into the market. So there has to be a way of reducing that supply. So, which brings me to my next point. If you feel that like, for example, like how are you going to buy back the tokens? Okay, how are you going to reduce the token supply? One, you are an investor. Okay, straightforward, right? You are an investor, you just really want to hold the tokens for whatever reason, right? And when you hold the tokens, you are pulling the circulating supply out of the market. You're just holding it. It's the hodl, right? You're just hodling. It's very simple. The next ones are institutions that want to speculate on the potential growth of this particular network or company. So you will then, of course, put all that into Coinbase custody, and then after you start accumulating, and then Coinbase custody will provide that staking service, and you don't have to do much stuff. And if there's any kind of rewards, airdrop, so-called dividends, or whatever that is linked to that particular token, it will be done in a very customized manner for you. Okay. The next thing is the company taking away that circulating supply. So when right now, what's the basis of you reducing that supply? You know what I'm saying? When you reduce the supply, you want to support the price. So let me give you a good example. Any exchange, okay, I shall not name exchanges in particular, but any exchange that is revenue generating, and if they decide to at least dedicate a portion of that revenue to buy back the price, to buy back, take the tokens away from the market and burn those tokens away. That is really at least true reduction, because theoretically they don't have to do that. They can just say, screw you guys, I already am making great money from the usage of my tokens. I don't have to buy anything from you. Why should I dedicate 20% of, or 20, 30, 40, 50% of revenue, throwing it back into the market for what? This is hard-earned money to pay for my costs. In fact, I shouldn't be throwing that out. But there are certain exchanges that bother to do that. You see, we never got the chance to really be private equity investors for these blockchain companies. Not everybody had that chance. So the next best thing, unfortunately or fortunately, are the tokens, right? It was immediately kind of available for you to buy. And it boils down to how much loyalty are you towards that token, and at the same time, how much loyalty does that company want to honor you as an investor. It's really a two-pronged thing, and it's an actual fact that even as a private investor, if the company wants to screw a private investor and just says, hey, there's just no revenue, we're not growing, and we really need to liquidate the company, there's nothing you can do. So don't think that just because you're not a private equity investor or an institutional investor, right, you are protected in any way. No, you're not. In fact, you take on just as much risk, if not more, when you are a private equity investor. Because at times, just look at what happened to WeWork, right? WeWork was, so-called a brilliant idea at the time, right? But with all that money raised, it never occurred to the owner, right, to go and start buying up properties, to own the property so that they are in control of the rental, right? And even if you are having a so-called, slower than average market, you still control that rental. You see, you can still control the margin, because your property price would either kind of stay stable or have a slow growth. It was a better strategy, but I guess they wanted to use all that investors' money to expand across the globe. But now WeWork, if they didn't have SoftBank, right? If they didn't have SoftBank to come in and kind of bail them out, right, they would probably be in pretty bad shape. I mean they're in pretty bad shape now, but I'm just saying that anything can happen. So we also have to be very careful when we talk about, the various types of, stuff in this crypto space, because right now nobody has any, direct access to financials. So we're all basing only purely on price. So hence today, my title is drawing some lines to look smart, because do I have the full access of information all the time? No, I sometimes have to just deduce it, because having that information to buy or sell, right, is based on your own personal emotion or actual information, right? So if you don't have the actual information, you're going in pretty much blind. So the next best thing is to kind of look where the prices have consolidated. So a lot of folks, right, tend to love to play breakout plays, which I kind of want to warn folks that, if you are someone who has very little or inexperience, right, with kind of these kind of stuff, right, and you don't know when's the actual breakout play, I think usually just looking for consolidations is the easiest. Now, I don't want people to stay away from the market, because I think that right now a lot of people are not looking at the market, which is kind of a good thing, because you are able to get cryptocurrencies, or at least BTC, at a favorable price. Now, of course, not as much recently, and not as much as I like to buy BTC at this price point, but I'm just saying that most people can't be bothered at this point in time. You still have the OTC, you still have the folks who are, running a crypto fund, or folks who are OTC. There's still activity happening. There are still people who want to buy and sell Bitcoin, people who do have some interest, but that has really taken a back seat. So for example, most, or at least the ones that I've spoken to, have seen their Ethereum related OTC deals drop significantly to not even providing any Ethereum related trades. Okay, that means we're just talking about using cash to buy Ethereum and holding Ethereum. So a lot of folks are kind of discounting that, and I feel that there is a reason for that. Because Ethereum was not meant to be a store of value, it is meant to be a utility, right? You are buying the Ethereum token so that you can, obviously activate your smart contracts. That was the purpose of Ethereum, right? And then right now, Ethereum is transitioning to 2.0. Now Ethereum is huge. It is really large, right? And of course, people are saying that DigiByte is actually larger than Ethereum, so on and so forth. But right now, no one really talks about DigiByte. So let's talk about the ones that are at least still in the news, who are still prominent. So right now, when you look at Ethereum is transitioning from proof of work to proof of stake. Now that's like from the railroad. There's no real railroad at the moment. It's all like for the horses to move. It's like on a path. It's like a path. Now railroads are gonna be built. It's gonna take some time because the routes and the routes are not necessarily gonna function smoothly. There's gonna be probably any kind of security related issues. Nobody knows. So for you to take that very first step, that's where you have the highest risk but also the highest reward, right? If it kind of works out well in the beginning, then you deserve to be rewarded. But I'd rather be in a position where I'm not chasing the prices. And I think Ethereum has been holding pretty solid below $200, right? And recently it didn't really drop to the crazy lows of below $100. It didn't do that. The last round it dropped below $100. It was at $90, and I was thinking maybe $50 would be a nice bet, but it didn't happen. So the next thing you have, Litecoin not doing so well. In last year it was not doing well, and I think it's kind of recovering at the moment. That's also another question mark. Why? That's the thing. I don't see a need for that many cryptocurrencies if you're talking about an actual currency. Using Bitcoin alone, in fact, solves a lot of functions, and a lot of merchants still prefer using Bitcoin. If you create your own cryptocurrency as a company, right, a digital currency or a digital asset for your own company, I think as long as you have a strong enough user base or customer base, it's just easier for adoption. It's just a straight up no-brainer. So right now, a lot of merchants just prefer at least accepting Bitcoin and being able to receive it from a customer, and after that liquidate it. It's really straightforward. There's no really why or whatever. It's just more straightforward. The rest of the other cryptocurrencies right now, and I'm only hoping, I cannot guarantee, I'm only hoping that at least one of the very few in the portfolio will do well, right? You're only able to anticipate because it's been 2 years to 3 years, right? There has to be some showcase. So you either look for the ones who have been around the longest, right? It's about time that they deliver, right? And there is a potential that these guys cannot deliver. So you must always prepare for the worst, guys. It's as much as you see what's happening on crypto Twitter, you want to put out your voice, your opinion or whatever, right? It really doesn't matter because your voice is really very small. Right now, right, it all boils down to whether they can do it or they cannot do it. It's really like that. And you only can bank on the fact that if the risk reward premium is there and it's viable for you, you have to take it. You just have to take it at this point, right? You can clearly see that Bitcoin, no matter what, is still trending upwards. So having said that, you know that the market cap over time is only going to increase. The only question is how much volatility are we going to have now till whatever price point that you feel that you're comfortable to exit the market. Now there are people who are stuck in 2018, right? They bought pretty late, and it has, it's been a very punishing 2 years for them. Okay, it's been a punishing 2 years for them, and it is totally understandable because you either put in 1k or 2k, and it was like, wow, you lost 90% of that 1 or 2k, and you say, okay, this is all garbage, it's probably not gonna work. So you have a bunch of folks who are not gonna touch this stuff anymore. Then you have the completely new folks who are gonna buy it, who are very curious, right? Because there has been some talks, or at least they started getting curious again. These are the new blood. They are kind of looking at what's happening in the market. They are trying to figure stuff out. So these are the folks that are, oblivious to 2017, right? They saw the charts which you're looking at right now, and they feel that, oh, okay, it is not as expensive, right? It's probably a good time to start looking at it because it didn't drop to the crazy lows of the $1,000 or $2,000 that everyone was hoping for. Right now, it also doesn't seem very likely that it's going to drop to the $3,000-$4,000 anymore either. It just seems that there's that very nice accumulation point above 6,000. So as long as we hold 6,000, right, the market cap is about 200 billion. Okay, that's kind of like the price point for now. It like the market just loves that 200 billion market cap. Sure, it did plunge below, and there will always be inflows and outflows in between. But at some point, the whole market is going to be caught off guard, and I do not want to be that individual. I hate missing out on shit, right? So that's why I always have this consistent dollar cost averaging strategy. I don't take my eyes off the market, right? I just don't. Because I feel that anything that you want to do, right, you need to do it for at least 5 to 10 years. Really, I swear. Have you just look at this period, right? You just look at this period where folks, took their eyes off the market. Imagine look at how much lack of volatility there was at this point. Imagine how punishing it was for the people then. So you are definitely coming in now. You're not gonna get it cheap. You don't deserve to get it cheap because you just didn't have the vision to look at Bitcoin then. That includes me. I am a 2016 baby. Okay, I'm a 2016 baby, February, right? That was when I bought Bitcoin for $378. That was my time. But can you imagine folks who bought, I don't know, 30 cents, $1, $100, when BTC was at that price? And can you imagine how those who stayed diligent, somehow they just had the vision to just keep accumulating, like the Winklevoss, twins, when they started out Gemini, they were buying, droves of Bitcoin, right? And you don't have to be a Winklevoss, right? You can just be a normal person and just say, oh, hey, you know what? This is something that I believe in. I'm going to dedicate a small portion of my salary into this, into this digital currency, and let's see what happens. You are now going to be in this phase as well. And this phase is actually pretty important, guys, because right now the market cap is 200 billion. The next time when you look at the market cap, when it's 500 billion, 1 billion, right? And you're not in, you're going to feel a big sense of regret, because it's not going to go away. Okay, I can pretty much guarantee on that. I don't know what's going to happen, but I know the market is not going to go away. This is a new asset class. This new asset class is here to stay. The question is, how is it going to be legitimized? Who are going to be obviously, there's going to be regulation or regulators around it, right? There's going to be some kind of surveillance and control. How that's going to be carried out? How do they limit the citizens from buying, declaring taxes on crypto? It's already there already. There are already services that, though still very green, they are there, right? There are also companies that are taking the insurance arm or at least insuring digital assets seriously as well, and providing a certain arm for that, so that you can provide some safety net for clients, right? Because if clients are going to be putting their tokens with you and you are compromised, what's my guarantee? Because I don't care about market volatility, right? Because that's something that I have to accept. But I cannot accept for the fact that you are holding my tokens under your custody and you lost it because of your your negligence, or you have some failure in your wallet. I want to have some guarantee. So because I'm paying you a custodial fee, I need to have some guarantee, hence the insurance. So you see, there is money coming into it, and we're talking about serious money here, guys. So all these things coming together, that's my belief, my vision, that this space is here to stay. So, just saying that overall, you kind of want to find that spot. It doesn't have to be my levels, guys. You can go and pick whatever level that you choose. I'm just giving you a reference. So from there, once you have a reference already, right, you can just stick to it. And you don't have to look at the market as much as I do. Don't think that, you have to look at the market every day or whatever. Sometimes just having a long-term perspective and just roughly seeing what these companies are doing, because you may be very familiar about a particular industry, right? Now, when I say this, also take this with a pinch of salt, because there are companies that are starting to have a bit of courage trying to raise money from private investors. Now, don't be too quick to go out there and start investing in these young companies. I would personally prefer putting my money into the existing companies, and they have the best chance of working because they have been around the longest. They have already messed up as much as they possibly can, right? And as long as they have continued funding or still at least have a decent amount of funding to function for the next 2 or 3 years, something should happen. Either they default and the cryptocurrency obviously has no more value, or they actually make it and they start creating that utility, that ecosystem that they are claiming that they have, right? It's only fair, what? You can't be having 2-3 years, you already took so much money in from the public and private investors and you have nothing to show for it. Now, sure, there will be big ones that will fall. Nobody knows this. Seriously, nobody knows this. No one knows which one's going to be the next Theranos, right? People are saying Hex is a cash out for Richard Hart. You know, Hex has been promoted very vigorously as so-called the BitConnect. And you know, I think these kind of things are very, very these things are very scary, because when you want to give, if you're going to attract people based on a return, an incentive, that already should trigger a red flag. I'll be very frank, because you are providing a so-called some sort of a incentive for why you should buy my token. Whereas if you are buying something, a token, right, there should be an exchange of something else, not just always monetary. Because yes, we are here to make money, don't get me wrong, you know, but if the token utility has been so poorly planned out and there's lack of actual execution, okay, that you really cannot use the tokens, right, which quite frankly, right, a lot of the tokens that currently that we own, right, is lacking in that. I just be very frank, even until now in 2020, which is pretty shitty, you know. And if you can't genuinely use your tokens, what the hell am I buying the token for? I mean, we just have to revisit this question over and over again. I think people there are folks who really admit that hey man, I'm here to speculate, I know what the hell is going on. But in the end of the day, right, whatever token that you've been holding, you hardly even use it. Other than you hoping that it goes up and I sell it, I make a profit, I get back my fiat, and I buy something nice for myself. Yeah, so that's all lacking. So right now, it's still lacking. There are sites that accept, you know, various types of cryptocurrencies to buy something in exchange for a service. But internally, right, that particular network has to be strong enough to sustain itself. It should not be, just because a ABC website is able to accept this token, that's why suddenly the utility is better. No, it doesn't mean that. It's just that, okay, that merchant is kind of comfortable with where the price of that particular token is at. It doesn't mean that it has created internal utility or internal demand. I am really saying that that network from XYZ company has to have its own community base. At the same time, not talking about just pure speculators, but actual developments happening, and there's an actual utility within the network itself. That has been lacking. Okay, sure, there are blockchain games coming up, which doesn't necessarily need a token. You can just play the game. You don't have to use the tokens for anything. Sure, you can use the tokens to buy certain virtual items and be rewarded as a player as you go along. That's also fine. I think that's an internal utility that counts. Obviously, exchanges use it for voting, for using the tokens for getting the tokens are used for offsetting your fees. That's fine as well, right? You can offset the fees pretty significantly, as much as 50% at times, either on your margin trades or your actual maker taker, right? When you do a maker taker, you can get a 50% off just because you're holding an X amount of tokens for an X amount of time. Other than that, you know, guys, it's pretty straightforward. It's like you buy, you stake, you put it on a wallet, you're baking, you know, you're validating the network, and you're getting a reward. Other than that, it hasn't really passed much, right? Don't you think so? So hopefully in the next 2 or 3 years, we start seeing true solutions coming out for the average Joe like myself, you know. And I hope that everyone kind of is in line and agreeable on that, to kind of validate why tokens should have value, right? And there has to be some kind of ground to validate this. So yeah, that's pretty much it for me today. I hope that you guys enjoyed the stream, and let's see how it goes, man. Anyway, guys, stay safe. Like I said, always work in controlled amounts. And you know, like I said, it's still a very, very, very volatile space. We have many cycles more to go. But you know what? Enjoy the ride. I think when you're watching this video, you're one of those folks, the rare few folks that are either still here or you're completely new, you're gonna pretty much take it as a learning experience. I think this is every year I'm learning something new about the market, right? Every year I'm getting the chance and opportunity to observe what is being developed, and I think it's a very exciting time, because it's not like the property market or the stock market where, you know, sure, there's always continued new companies, new innovations that are coming out, but you know, the digital asset space is working pretty fine. You know, it looks very exciting. It's just that right now, how can I really touch base more with it? And there are folks who are more connected than others, right? Especially if you're a developer, you can start developing on certain smart contracts. That also actually gives you an edge, because when you are a developer, right, you tend to kind of know like, oh man, this is pretty shit. This platform, the programming language is really too difficult. It's too challenging. It's not secure, and you know, you actually have a head start. So as a developer right now, you have an edge, right? But if you're not a developer and you're trying to build something on it, right, then you have to have, you know, at least some friends who are able to tell you the difference. Then now you're having as an investor, you have to kind of ask yourself, how do you validate? And you can't. Everything is just based on speculative value. The part when it gets exciting is that when numbers, financial statements are coming together with the tokens. That will probably happen when there's a way to kind of have the companies more compliant with the existing governments and financial bodies. That's the so-called STOs, or even any company that existingly wants to follow and comply with SEC's rules and regulations, or whatever SEC in their particular country. Okay, so with that being said, I hope that it wasn't too, I guess it was kind of dry, but hope you enjoyed the content. See you in the next video, guys.